Good day, everybody. Welcome to my YouTube channel once again. This is FX. Today, we'll be talking about everything you need to know about order blocks. Everything you need to know about order blocks. Now, without wasting much time, remember, order blocks are where institutional buyers and sellers create their orders. Basically, the creation of an order block has to do with what? Demand and supply. The process of what? Demand and supply. Then whichever team or party that will won the time frame is, if it is either the buyers or the sellers. If it should be the buyers that won the time frame, we know that the next candle is going to be bullish, creating a bullish what? Engulfing candle pattern. And if the sellers won on that time frame, we should be expecting to see a bearish engulfing trade pattern. Now, you understand what I mean by this? What I'm trying to say basically is that it works with demand. It works with demand and supply. Remember, if the demand of a particular product is high, that product tends to what? Appreciate. So same thing applies to the forex market. Now, let's say this area is the order. This very candle should be the order. Now, remember, there will be multiple orders going on this time frame. Let's use, for example, we are working with the, let's say we are working with the 1 hour time frame. Let's just say, for example, this is a 1 hour candle. We are trying to draw a 1 hour order block. Now, we have our order here. Remember, the major order is this very the first candle is the order. The first candle is the order. Let's say on this candle, we've run 40 minutes. Remember, it's a 1 hour candle, so we are left with 20 minutes. Now, let's say this very candle, the buyers won. Let's say price closed higher compared to the previous opening price. Remember, the closing price of a candlestick is the opening price of a new one. So let's say there was a candle here before. You understand? So another one, the price closed higher. Now remember, this is a bullish candle. We know that what the buyers won on this challenge. Remember, for you to get a bearish order block or a bearish engulfing candle, we want to see a bullish candle, then a bearish candle what? Engulfing it. For you to get a bearish order block or bearish engulfing candle, we want to see a bullish candle, then a bearish candle engulfing it. Remember, the opening price of a candle is the starting price of a what? Of another. Let's say a candle opens and closes below, engulfing this previous one. This will be the week. This will be the week, but the closure, as you can see, this candle was engulfed this very one. This is our main point of interest. Now, this candle engulfed this very one, automatically leaving us with a what? Fair value gap at this area. There will be a fair value gap here. These are among the reasons why another block should be validated. Leaving a what? Fair value gap at that area. As you can see, you've seen what happened in this structure. It's very clear and what? Understandable. This is a bearish engulfing candle. Now let's say we'll pen this one blue, whatever you want to use as your bullish candle. Let me use green because green is very popular, so let's use green. I'll use green. Why this place? I will mark it red. I will mark it red. So this is a what? A bearish order block. A bearish ODB. Bearish ODB. Let me make the right top smaller. You understand? So this is an example of a bearish order block. Remember, there will be a bullish candle, then a bearish candle engulfing it. indicating that what the sellers won on this trend. We need two candles to form another block. This was the order and this was the block. We are working with the block. This is the block, this is the order. This was the order, a bullish order, engulfed by a bearish order, showing that what the trend is going to reverse, creating a what fair value gap for retracement for those that want to trade into it before pushing to the downside. Remember, for you to get a bearish engulfing candle, we want to see a bullish candle, then a bearish candle engulfing it. That is the pattern for a bearish order block. Now, as for the bullish order block, it's vice versa. We will want to see a bearish candle. Are you getting me? Then a bullish candle engulfing it. Let me mark it green. This is the structure for a bullish engulfing or bullish order block. Remember, fair value gap imbalance is very necessary to validate an order block. Imbalance is very necessary as it shows that what the trade is likely going to what reverse or retest that zone, creating a what fair value gap between these two, even if it's a little gap, even if it's like this between these zones, for what those that want to retrace back into it. This is an example of a bullish. This is an example of a bullish order block. Choose it. Okay. So this is an example of a bullish order block. The ODB there stands for order block. So let me call it in English. Bullish. So this is a bullish order block. We have different rules that are guiding what order blocks. The first rule is simple. If you are looking for a bullish order block, we want to see a bearish candle, then a bullish candle engulfing it. That is the first rule. Second rule, it must have a fair value gap protecting it. You understand? So it must have a fair value gap protecting it. You understand? So after having a fair value gap protecting it, it must either appear at key areas. Remember, we are working with what? Key areas, i.e. support and resistance area. It must appear close to a what? Support and a resistance area. Now, for you to validate your entry for an order block, I believe you know what an order block is now. Now, how do you trade order blocks? Where do you place your entries on an order block? Remember, the rules of trading order block go as follows. For the bullish order block, if the body of the candle is bigger than the wick, you pick your entry from the wick. That is, your entry should come from here. In this case, because what? Because the body is bigger than the wick. But in a situation whereby we have, for example, we have longer wick compared to body. Let's say this wick is long. Let's say this wick is long, then the body is what? Tiny. Let's say we have a tiny body and a long wick. Something like this. Remember, it's still valid as a what? It's still valid as an what? Order block. So if you are to get something like this, you understand? Where in a situation whereby the wick is longer than the body, what do we pick? Where do we pick our entry? We pick our entry from the body. This body here. That is where we pick our entry from. SL should be what? One candle should be what? One candle before the other block. I advise one candle before the other block, because most of the time you can see your trade, you will just come grab liquidity at this area, then continue to push to the upside. So I suggest you target one candle before the other block. It's advised to target what? One candle before the other block. But if you choose to, the ideal place to put your SL should be below this other block. Vice versa for the bearish one. If we have a longer body like this, shorter body, sorry, then a longer wick, our entry should be from the body so as to retrace back to it before pushing to the downside. Vice versa. This is the other block pattern and how to trade another block. Remember, it must appear at a key area, either support and resistance. For a bullish candle, we want to see a bearish candle, then a bullish candle engulfing it. For a bearish candle, we want to see a bullish candle, then a bearish candle engulfing it. Then last but not least, it must have a fair value gap. We don't want to trade jam-packed other blocks. No, we don't want to trade that. So let me show you samples on the chart. That is, if I can get any, I think this is the gold trade. This is my chart on gold. So I'll be showing you other blocks. We want to see if I'll show you a valid order block. You can see on this chart there's no valid order block yet. There's no valid order block yet. Remember, we are not working with this type of pattern. I don't trust these types of order blocks. These types of order block that has longer body. I don't trust them. A valid order block is supposed to be short. I don't trust this type of order blocks. Now, look at a valid order block here and what happened. Look at a valid order block here. You trace back to it. Should be on the 15 minutes time frame on gold. So this is a valid order block. This is a valid order block here. You can see what happened. This was the order, the block before the block itself, engulfing it. And what happened when price traced back to that area? Look at it. It was bullish. So you have to what? Look for a clear order block structure. Not all order blocks are tradable. Some people will come, they'll look at they'll see this long, you can see something like this. This is, I won't call this another block. There is no other block here. I won't call that another block. Rather, I will call this place an order block. Are you getting my point? I will call this place an order block. And you saw what happened after the reaction. Price retraced to this area. I think it reacted to the body of the other block itself. So you've seen what I'm telling you. Like I said, if the wick is longer than the body, pick your entry from the body. That is what happened here. You can see that the wick is longer than this body. This very wick is longer than this body. Now what happened? Your entry should be from the body. That is how to get sniper entry. When price got to the body, what happened? It was a clean sell. But in a situation whereby the body is bigger than the wick, you pick your entry from the wick itself. Let me see if I can also get example for that. You pick your entry from the what? From the wick itself. You understand? So let's use let me look for a clean order block, because like I said, I won't call this another block. Another block has to be what? Short. I won't call that another block. So let me look for another sample. Let me look for another sample. Okay, I've seen one. You can see the body was bigger than the wick. Look at it. If you should measure this wick and this body, it's what bigger than it, and it comes with a what imbalance. It has a fair value gap. Look at it, a fair value gap protecting it. Now, what happened? Remember, it didn't hold, but it was a valid trade. If you can see, for if you should be scalping, your entry should be from the week. Like I said, your entry should be from the week. So you can see immediately price got to this week. Since the body is bigger than the week, you can see what happened. It traced back to this area before coming to the downside. Automatically, you should hold with break even if you're a smart trader. So these are the examples of an order block. An order block has to be short to validate it. And it must have what we call a shelf. Though I'll be talking about all you need to know about breaker block on my next video. I'll be releasing that video unfailingly. I'll be turn on the notification to on my profile. You can turn on the notification so as to get notified each time I post a new video. I'll be posting that video on Wednesday. Make sure to subscribe, turn the notification button. You won't want to miss on that. I'll be explaining all you need to know about breaker blocks. Then I will also be explaining all you need to know about fair value gaps. That will be on our next class. So if you like what I've posted, you can as well give me a subscription. You can subscribe to my YouTube channel, like, share, so as to enable me post more videos. If you are looking for my Telegram channel is on the link, it will be on the description. You can as well click it. If you want to start Forex, I have the best broker is on the description. You can create accounts with the link there. You can also reach out to me on Telegram. So bye for now.